Hello traders everyone, my name is Gregor Horvat and welcome to our new video Surfing the Elliott Waves, where I'll look at some of the most interesting developments for today ahead of the US non-farm payrolls report. This video has been brought to you by Orbex. So I'll look at dollar index, S&P 500, cable, dollar yen, euro yen and silver. So markets are currently slow, but generally speaking, we are still seeing some kind of a risk of mood since end of December. So this is now trying to have a positive impact on the US dollar. We are seeing US dollar trying to recover against the major currencies. I mean, dollar yen is moving quite nicely to the upside. So we think that the US dollar is headed for a correction that could potentially see even more gains in the very near future. However, the US non-farm payrolls report should be a very important event today when we may see potentially number above 200k. If that would be the case, then it means that maybe Fed has more room for further hikes, and this could potentially send the US dollar slightly higher. However, Paul really mentioned in last meetings that they will be slowing down the hiking pace. So even if somehow jobs will came out strong, they probably will still stick to their plans because inflation is coming to the downside. And on the other hand, if they would be too aggressive with hiking rates, what this means is that there will be risk of a recession, and then that's why I believe they will be very careful. So even if we see any kind of a dollar strength after the data, I think that there can be a limited upside later on. And if we look at the charts, I will actually look at the US dollar equal weighted chart, and that's equal versus, because it's measured versus the euro, Japanese yen, Swiss franc and pound. And what we can see here is a very nice move to the upside after this consolidation period through holidays. So we are now testing already these new highs here. So I believe that we are in a wave C, and I've been anticipating this wave C for a while. And looking here on the right, I have the Elliott wave map of this corrective recovery. So corrections are always made by three waves, minimum three waves. And I think that we are now in the middle of that wave C. It could move slightly more upside, maybe even make some an extension before potentially finds a top. But the whole idea is that the trend here was still to the downside. Okay, so whenever you see then a free wave rise, you should be aware that maybe after this correction, market will resume lower. Okay, so I think that we are moving into potential resistance, and if that's the case, then we know that majors like euro, pound, especially commodity currencies, will try to find the support. Okay, especially once we have these five subways up within a wave C. But of course, a lot will depend on the reaction on today's data coming from the US. So I think that we are in a corrective phase here. Looking also on cable, notice that we are coming to the downside here from that resistance. Maybe some kind of a right shoulder can be in progress now. I know that we are approaching some interesting supports here. That should be around 1.18 level. So we will see what kind of a reaction will happen there. I think that if we get a bounce, it could be quite attractive for potential longs. What we should keep an eye on is a break above that bullish level. So if we see an intraday impulsive reaction, okay, let's say that market finds the supports today and then rally next week above that level, then I think that buying pullbacks would be quite attractive against the stop loss that should be below that low. So for now, the trend is still down, the intraday trend, but I think that we are approaching potential support. However, if you are more patient with the potential setups, then of course you should wait on this bounce first. If you are a little bit more aggressive or maybe just looking for more longer term perspective, then certainly these are attractive numbers here. Now, looking at dollar yen, as I said, dollar yen is also turning into a correction. The US yields came to the upside this week slightly. So it looks like the dollar yen and US yields are again back in positive correlation. So that's why dollar is having some attention here. And notice that we are coming out of this wedge formation if you want, but I'm looking at a classic Elliott wave 5-wave drop that I think could be finished because of this 5-wave cycle. We even can count 5 subwaves down to a new low here to 129, 130, where I was looking actually and been expecting this kind of a reversal. Also notice that MACD is forming a divergence here. So it was a classic end of a fifth wave down here. And more importantly, notice that we are now having very nice impulsive reaction higher. If you look here on the intraday chart, I have an hourly chart here. That's a very nice 5-wave rise here. So we are moving into this resistance now, maybe a little bit late to for any longs here. It was a pretty nice and aggressive move, so it can be a slowdown, especially should be careful ahead of non-farm payroll support. So I think the next dip, however, could see potential limited weakness here. You should pay attention to this former fourth wave support. So the first one should be around 133, and then you have 131.70. Okay, so as long as we are trading above 129.50, I think that next dip could be maybe even some kind of a short-term intraday long opportunities. But keep in mind that big picture still shows that there can be a temporary top in place, not a temporary, maybe longer term one, and that you are now just in a corrective recovery. So be careful, you will really have to be nimble here because we could be actually trading into or making this right shoulder. Okay, so maybe slightly more upside. Definitely the ideal resistance would be around 139 to 140. Now let's take a look also on euro yen. Since you mentioned dollar yen, well, as you know, dollar yen could have an impact on other yen crosses as well. What we are seeing here is a very nice, clear, impulsive recovery. We just reached a new high here, so maybe we are already trying to find some resistance of a fifth wave. Still, the important is the next pullback. Even if it occurs from here or from slightly higher prices, it doesn't really make any kind of a real difference. You just should wait on these three waves of a pullback to show up before you may look for potential longs while the market is clearly holding this support. So I think that the next dip could be very nice buy. You have nice support at 139.90 and 140 obviously. Also, let's take a look on silver. So silver here, metals are making some kind of a pullback as US dollar is coming to the upside. So not a surprise here, but even this one shows that we are stepping in this corrective mode. I think that we could be in a wave 4 here. Again, very nice support. Maybe the first one to watch out would be around 22.50. There you have this upper trend line. It's the parallel trend line actually of this base channel. Okay, so what's the base channel is? Well, base channel is a channel where you draw the or connect the point of starting point of a wave 1 and point of a wave 2. Put a parallel line at the top of wave 1 or here at the top of wave B because that was a flat. That's why I use this level as well. So these lines should be now very important as a support for a wave 4 because we clearly broke above that lines here to make wave 3 an extension. So you definitely, whenever you track or want to see wave 3 as a part of a higher degree, very strong trend, impulsive one, you want to see these lines to be broken and then to cap the supports on a pullback here for this wave 4. So very nice support, 22.50 as the first one. The deeper one could be around $22. But still, you're only in the first leg of this pullback, so just be aware there can be more weakness coming. Also, divergence on the RSI suggests that clearly bulls were tired up there. Now, finally, let's take a look on the S&P 500. Now, the S&P 500 really didn't move much here. I think that we are just consolidating here. I have an intraday count. Maybe that's better to look for. So here we are just consolidating. It's a triangle. I think it's pointing to the downside. So either it's a triangle for wave B, and we are going to see limited weakness around 3700 for a wave C sell-off, or maybe that still ongoing triangle in wave B of B, and you will see a higher test of resistance. So notice that I'm tracking two different interpretations, but both suggest that we should potentially breach this 37.85 support. Okay, so watch out for potential drop towards this level in maybe already today after the data. Who knows? If we see data causing a reaction to the upside, then as I said, watch out for 39 39 to 4,000 to be a very, very important resistance. Okay, so risk off, in my opinion, still here. This could bring the US dollar even higher, but as I said, dollar is only in a corrective stage. Okay, so I think the dollar weakness will resume, but maybe we will have to wait a little bit further towards the end of the month to see some really strong moves. I think that the commodity currencies could do very, very well after this correction is finished. Okay, traders, thank you very much for attention. I hope that you enjoyed this video and be careful today going into the non-farm pair support. Trade well. Bye.